Hello guys, and glad to have you on board again today. The merge is officially in, and yes, it has been going on very smoothly. Just like every rational person out there predicted it would happen, despite the fact that some stupid narratives here and there have been arguing about the opposite for several weeks now. They've been filling the voids of people, irrational behaviors and stuff like that. So like I said, the probabilities were significantly higher to say that things would do great. And I've always taken that assumption, even though I knew there was still an underlying risks out there, because nothing is ever for granted. So yes, there was a risk, but such a negligible risk is, like I said, if you fear of going outside because you could be hit by a bus. Yes, this is true. There is a clear chance for you to be hit by a bus, but rationally speaking, you don't give a fuck about these odds on a day-to-day basis, otherwise you would just be crazy. So that's the same assumption to me. What I've seen throughout the latest few weeks as we headed into the merge just sounded so utterly irrational that it's been outrageous at some point to even just cover anything about the merge on a day-to-day basis, yet many people came down this flow. So first of all, I criticize the general, information system we live in. This is outrageously stupid to play with people's emotion out of something that has 99.9% chances to succeed. Yet, people believed it wouldn't. So here we are. It did great. Are these guys going to apologize? Of course, no, they won't. So the thing is that, once again, look at the charts. When you're in a range, don't listen to the news. It makes no sense. And we are in ranges for cryptos. But there's one thing I wanted to talk about as well. Because, of course, lots of things have been covered recently about what the merge will change and so on. But I thought it wouldn't just be wise enough to criticize how bad the global coverage was. Of course, don't get me wrong, some people did a pretty damn good job. Those who did what had to be done. To pull it plain simple, those who've been, for example, made the calculations on how low the emission rate would be decreased, of how much the real emission will look like, what we expect to be in terms of balance between the fee burns and the net emissions for proof of stake consensus to be reached. These guys have been doing a very good job. The numbers they gave are pretty accurate. And from what we see now on a real world merged Ethereum to proof of stake is exactly what these guys said. So yes, there's been a lot of bullshit lately, but there were some people who had made some pretty damn good job. So cheers to them and fuck you to the others. But once again, I would like to add something to this whole thing. So despite the pretty outrageous covering of the merge and the very good coverage of those who were not the ones making the headlines and so on, but did some background check and background work around math and things that truly provided reliable fundamental information on how deep the changes of the merge will be, there's one thing I've seen very less covered and that I wanted to talk about today because it's definitely important. What happened today is not just the merge switching to proof of stake and so on. So forgive me just sounding dramatic, but to be honest, the major change in entire history of Ethereum, but not just Ethereum. So that's the first time a blockchain is profitable. And no one has ever talked about that today. Yes, the merge was a success, but like I said, it was granted already for those who are smart enough to play with statistics. When something has a 99% chance to succeed, how the fuck is the point to talk about the potential failure of 0.1%? So it did good and okay, just as it is expected to be. So this is normal to me. What's abnormal is that no one mentioned the true reality of what happened today. The net emission reduction of 90%, meaning that the base emission rate was around 4.5%, with deflation at some point, meaning that the fee burns might have overstated the net emission. But there's one thing we know for sure. This emission now has gone down to 0.5%. So it has been a 90% net reduction of it, yes. But the thing is, on top of this, being deflationary out of 0.5% is going to be easier to achieve. That doesn't mean it's going to happen every time. So those who call Ethereum ultrasound money expect that the demand will rise further than what it is today. I think this is rational enough to talk about that, but this is an assumption. So let's call that another narrative. Even though it's not, let's assume it is. So if we pull away the demand side for Ethereum and concentrate on the supply side, there's one very important factor that no one has mentioned. Net emission reduction was the only cost for Ethereum. Ethereum as a blockchain sells block space. So it has a product to sell, and it has some expenses to get to reach out those sales. The cost for Ethereum is the cost of security. The cost of security is the net emission of new tokens to pay for those who make that consensus. Yes, everyone said 90% reduction. Yes, sure, it's a reduction. But what the hell has it done? It reduced 90% of the Ethereum's costs. This has terminated at the minute the merge was active. But the thing that, even if we speculate on the demand to be bigger or even just to stay the way it is today, that means the revenue stream for Ethereum hasn't changed. Everyone knows the merge hasn't changed anything to the gas fees, which means the same old block space is potentially going to be same old used as much for the same old revenues, because gas fees aren't impacted by the merge. So same revenues and 90% reductions of costs. This is the first day in its lifetime that Ethereum has been profitable today. Its net emission were below the fees collected on the day. So congratulations, Ethereum. What you've done today is not just merging, it's being the first ever profitable blockchain in the entire blockchain history. Every altnet fucking layer 1 who's been trying to compete with Ethereum is far off being near this. It's not going to happen anytime soon that an altnet layer 1 will be profitable. Ethereum did. I've always said it. This is important that you guys understand how big that is. Because we can make every fucking assumption we want about how the demand will be for Ethereum. This is not something we can gamble on. This is data. This is reality. Ethereum is the first ever profitable blockchain. And if you don't understand that this is value, this will attract demand, then we have to do the 101 of what value is once again, okay? So this is not just an insignificant change today. We've said it, it's a fundamental change. It reduces inflation and reduces the supply significantly, but it certainly does another thing that has been far less covered than the rest, being the first profitable blockchain, okay? And being the first and only to date, if you don't understand that this will create a tremendous amount of demand on top of the existing one, then you really want to have to think about it. Because we have a demand model, the one that I use. Give me a second to pick it up. This is the one that I use. Remember that there's one thing we know for sure. 2021 was definitely a peak of hype for Ethereum. All this tremendous stupidity around DeFi and then NFTs and so on created staggering amount of hype. Yes, DeFi is the future. Yes, NFT technology is a breakthrough technology, but certainly not selling JPEGs, okay? So the NFT standard is the future. Selling JPEGs? Fuck. Stupid. So peak of hype. Okay, then of course, trough of delusionment. Here's where we are now. We're starting to recover from this, meaning that there's one thing we know for sure. As we had a peak of hype, there's going to be a rebound into the hype phase. Hype will be there again. So we're guaranteed to have hype demand. This one's guaranteed. We've seen the peak of hype. The thing is that the adoption curve, like we said, it's guaranteed as well. Why? Because just people get into crypto. This is revolutionary technology. Whether you like it or not, people would adopt it. It's inevitable. The question is just, how mature are we in terms of the adoption curve? Well, Ethereum still has a lot to go. We're headed into the early majority now, so this is the most impactful type of demand ahead of us. And these twos are guaranteed. If we take and add up the area underlying this thing, you would easily understand that normally when we reach out to this point, we have enough, we have enough sub area to just go right back to the expected demand we had back then in the peak of hype. That means only with the things that we know for sure, that there will still be hype around Ethereum. It's certainly not going to go as high as it was in 2021. The nature of the adoption is a reason for that, but the adoption curve will create a separate types of demand, different types of participants. We've made an entire video about that. But if we just add up these two areas, you will have quite similar level of demands of 2021. Though prices are the conjunctions of supply and demand, okay? Or at least value or true prices are the conjunctions of supply and demand. That means with the guaranteed demand, we're going to go right back to the demand levels that we've seen with only hype back then. But the demand will be similar. Just assume that. Similar demand of 2021 with a 90% supply reduction. If you think that we'll trade with the same prices, you don't understand the supply and demand mechanics. That means we know for sure we should have something similar in terms of demand. Not necessarily immediately, but in the future we'll get back there. And the net emission is not something that we're going to roll back. It's a granted stuff. It's a step sequence. From now on, the reduction is 90% lower than what it was in 2021. So at the same level of demand, with the reduced supply emission, prices can only go higher. So we're already guaranteed to have higher Ethereum prices. It's just a matter of time. I mean, we're talking about raw supply and demand. Okay? The second thing that we need to talk about is that Ethereum's proof-of-stake transition is not just supply reduction, being profitable for the first time, being the first blockchain being profitable. It's on top of that going to change significantly the way we reach our consensus. And I'm not going to go into the techie details, but lots of reliable texts in Ethereum have mentioned the fact that lots of technological breakthrough will be achieved by these transitions of proof-of-stake. Proof-of-stake is going to allow lots of things to be developed which would have been very hard to plot in a proof-of-work consensus. Light clients, lots of things like that will be far easier to implement in Ethereum so far. The proof-of-stake consensus changes a lot on what this blockchain, what the underlying Solidity language capabilities will be. So it makes it a lot easier for devs to create. So I'm not saying that we're going to get these S-curves performing breakthrough technology moments, but if we do, this was significantly going to change the demand. That means that if we do have a breakthrough, we're going to cross over all-time high level of demand, even quicker than that, and there will still be adoption to support and the underlying factor of S-curves breakthrough, meaning that once we break through, we keep on having a positive curve afterwards. Innovation is only positive. You cannot roll back technology. It only improves. But there is a breakthrough moment. So if Ethereum is headed to this breakthrough moment, thanks to proof of stake, which makes things easier to build on, then in that perspective, it's not just going to be going all-time highs, folks. And last but not least, if you forgot about what we said previously, this is the demand side of the equation. The supply, we know what it is. We can calculate supply emission and stuff. As it's close to zero, there's no supply dilution ahead. So it's all a matter of demand. But there's one thing people don't talk about. Being profitable is not net neutral. When something makes profits by selling a product ahead and aside of all the expenses that lead to creating that value, if it's a net positive in the end, this creates demand on itself. So if we take the assumption of all those three demand curves, adoption, technological breakthroughs, and hype returnings, if we add up raw fucking value due to the fact that we create value out of this protocol by what we sell and what we pay to create that. Block space isn't just a virtual bullshit that has no underlying value. It's something that a lot of competition has been driven to. There is crazy demand for this. So understand that being profitable is going to bring a lot of attention to Ethereum as a token, because having Ethereum makes you profit from those value created. It's not a net neutral stuff. And I've seen a lot of people being absolutely outrageously wrong about that, because over the course of the latest few years, the volatility has erased a lot of people's mental health. But just make it plain simple to you guys. This is a not net neutral game. This isn't that. Markets are not about that. I know a lot of people think of it that way. They think anyway, it's just a random game. Prices go up, down, whatever. Some people think they found a cheat to the game because they have whatever bullshit structure they've been following so far and that it worked pretty damn better than average. So they think they cracked the code. Let me tell you one thing. I'm not the best trader out there. They're probably better than me. But I'm much better than the average. That I can say for sure. But the thing is, if you don't understand that markets are not casino-like, people think it is, but it's fucking not. There's one thing in markets that you will never get into the casino. Okay? A cash machine in a casino creates no value. It only redistributes the money you put in. In Ethereum, it's no such a thing. Ethereum creates value, and it's starting to be the first ever profitable blockchain. So don't ever compare this to casino, please. This is the biggest mistake. Those who argue that in the end, this is just buying and selling stuff. No, it's not a 50-50 game. There are no 50 chances to go up, just as 50 chances to go down. This is not the reality. The reality is that when there is value increasing and profits being made, the value is increasing on a day-to-day basis. And prices don't randomly go up and down. They do on the short-term scales, yes, but over the long term, things that trend don't trend out of no reason. The trends on longer time frames are created by only one thing, value shifting. And if there's one thing I can tell you for sure, is that the Ethereum's value has shifted, and it's shifting as we speak. So if you think this thing is going to zero, that means you think either internet will be shut down or World War III. There are always things that can change that. Don't make me say that things are guaranteed to the upside. Nothing ever is. There's never 100% chance to succeed. But there's one thing I can tell you for sure. It's not 50-50 in here. Prices are much more attracted to the upside than they are to the downside. You can gamble the fuck out there in the shorter time frames. No value is playing the game in 15-minute charts or whatever. But anything on top of 4-hour charts is subject to value direction. What Ethereum did today is add up to the demand. There was already, in my personal model, a lot of demand ahead of us, but it's only made it worse today. There's going to be even more demand, and the supply has been reduced. The value can only go up, and prices may diverge from the value on the short-term basis. But if you don't understand that thing, that this is no 50-50 chances up and down, it's 70-30. There's 70% chance that we're going to go higher in the future. There is still a reasonable probability that it all fucks up. Yes, but play against the statistics in trading and you'll die. It's only a matter of time. The money flows from those who understand the natures of market into those who fight against it. That doesn't mean Ethereum will be to the moon. It just means there's one thing Ethereum can't do now is have equal chances to go up and down. It has more chances to go up than down. And this is not me finding the cheat code of market. It's just that, once again, markets are not a zero-sum game. And if you think of it that way, you really want to have to think through this again. That is what today changed in Ethereum. Ethereum already had a shitload of demand ahead of it, but it just brought one more by being the first ever profitable blockchain. And this isn't something you can ignore. Okay? Though don't take that as a shield, whatever, just blindly buy. Anything and any money you put in the market comes with a risk limitation. Even if this is a buy and hold. Buy and hold means you're putting money you're willing to lose because there's still chaos in this world. But outside of chaos probabilities, the ones we talked about in the beginning of that video, you can get hit by a bus anytime you go out. This is chaos. Chaos happens, but the probabilities of chaotic is not as big as people think. So like I said, there's still a probability all of this fucks up. We end up World War III or whatever bullshit people think of now. But the thing is that if it doesn't, there's one thing I can tell you for sure. Value is rising, and it's rising day by day. Just because this protocol now makes profits and that there's more demand coming ahead. Because there's no competition. No one else sells block space with profits in this space. That being said, not shilling the coin. Think twice before you put any money in the market. There is risk management to every strategy. Bye, guys.